Hey everyone, I'm Gloria S. Crump, the Queen of Real Estate. Thank you for joining this week's Tea and Crumpets. I have Cayne, Harrelson, and Rhett with Synergy One Lending. Thank y'all for joining us today.
Thank you for having us.
Yes, definitely. So with Synergy One Lending, give us a little background of the history of the company.
Well, Synergy One, we're home base out of San Diego, California. We started in 2013. Cayne actually opened a branch here in 2016.
Wow.
Yeah, just very good company, very strong company. Our goal is to be the #1 lending, really mortgage company in the nation. So we're really excited to be with them. Like I said, very strong, very strong.
That's great. And so y'all been here at the Wharf for going on now, I guess, 8 years.
Yeah, almost.
Oh my goodness. Well, it is a fun place to work.
It is.
Yeah. So we have y'all have several programs that are ones that are pretty much y'all can kind of cater. We were talking a little briefly earlier about how y'all can cater to special needs, so to speak. So not just the properties themselves, but also, let's say I have a self-employed client, which a lot of my clients are, and we all know that when come tax time, they try to get a good CPA to possibly find as many deductibles legally possible.
Correct.
And so with that case scenario, sometimes they don't look great on paper at the end of the day. So do y'all have programs that can cater to those particular type clients?
We do, and the great thing about us is everybody has programs. The difference is we actually utilize our programs on a weekly basis.
Yeah.
I'd say 90% of our clients are self-employed as well. And so CPAs do a great job these days. They understand the tax codes, a lot of write-offs. Self-employed person like yourself, we could take a 1099 just the last year. We take 10% off of it, and that's your income. That's what we can use.
Oh, wow.
And for purchase, refinance, any sort of program like that. We also can go bank statements if they are not 1099 and they're self-employed, 100% owner, or down to 50% owner of the company. We take their bank statements, gross income, what's their deposits, and we take a little factor out of it, but that's their usable income.
Yeah, so now is that for people who are looking for primary residence with the 10%, or is that looking for investment when y'all look at that, or is it, how do y'all handle if it's an investment versus a primary?
Primary is the same, the programs are still the same for primary.
Yeah.
Investment wise, we still are able to use proposed rental income to help offset, and so that does open up some more avenues.
That does.
The odds is they have as long as they have down payment, normally require 25% down. We can get it at 15, 20% if it's a perfect scenario.
Yeah.
But as long as they have down payment, people, we have repeat customers that's going to come back once their cash flow hits a certain spot, and we're going to use bank statement programs to get them into these condos.
Well, and talking about condos, because that's always one of those iffy moments. We're like, oh gosh, are we going to be able to even get financing? And right now we talked about how insurance is a factor, and we're starting to see a lot of people are renewing their insurance policies. And you briefly spoke about a complex that went from a 5%, which is the required, deductible, to 10%.
Correct.
So what happens in those scenarios?
Well, first about condos, our pipeline is filled with realtors who have called us because someone else could not close on the condo, either because they don't put the work to get the correct documentation, or they're not looking at it correctly.
Well, and I love how they'll wait to the last minute and be like, hey, we need the building's insurance. And I'm like, wait, y'all haven't gotten this yet? And it's usually down to the wire.
Due diligence is our #1 goal. We don't mind telling people to hang tight and give us a couple of days to get all our ducks in a row, because each year, insurance changes.
It does.
And a great example is with Enclave on Oak Hill, and that's the one that we're dealing with now. It was on Fannie Mae's approved list a week and a half ago. It was on there. And while through our process, I actually had another realtor call me and told me, hey, so-and-so couldn't do it. Can you help us? I'm like, yeah, I think it's fine. Well, I finally got the insurance from them, and sure enough, it no longer met the deductible standards. And while we're in process, Fannie Mae updated their list and showed it as ineligible because of insurance. Now that makes it non-warrantable. Well, it's not a big deal for the client. He's putting 25% down. The rate's the same as it was on a conventional loan, and we get to move forward.
Oh, that's great that his rate didn't change.
So it's not a huge surprise. It may, price it. He may, let's say he has out of pocket another $500.
Yeah.
But it's a non-warrantable condo. on the Gulf Coast.
And he's able to continue forward
Correct.
with the pretty much the same terms, length of loan, and everything.
Yeah, 30-year mortgage,
Wow.
no prepayment penalties. I mean, we have opportunity to do it.
That's awesome.
Yeah.
And so, well, that's a good shame. My mother just listed on enclave if y'all hand it over.
I did see that.
Yeah, I'll be handing over her y'all's info to her for sure. And so, with that being said, when someone does call you, the good thing is y'all's turnaround time is pretty impressive. I mean, from application to funding, you were saying y'all's average time right now is
Average is 19 days right
Yeah,
now.
that's pretty
So
impressive.
that's from the day someone fills out an application, you know, to the time that we actually fund the loan.
And that's as long as you get all your documents
Right,
sent
yeah,
as
absolutely.
soon as possible.
Absolutely.
But for 19 days, that's a huge plus in y'all's book.
Yeah, it's about 10 days faster than
Yeah,
anyone else is
for
trying to do the
sure.
same thing we are. So.
Yeah, exactly. Especially if somebody calls you at the last minute, like, we have an issue here. And so, and right now, you know, with the rates, I mean, obviously, you know, we talked about this on another video that they're not, as far as, they're not adjusting down like we had hoped, but y'all are extremely competitive in your rates.
Yep.
So.
Yeah, we rate. I mean, to me, there's no reason why we should not at least have an opportunity to quote a client to put them in the best situation. Just like the non-warrantable. You know, again, me and Rhett, our pipeline is filled with people that we never met before because someone was unresponsive or they gave them a deal that maybe wasn't expected. And then they come to us and we'll tell them, say, look, that's a great deal. Go for it. We can't beat it. Or 99% of the time they would say, listen, here's what we can do to make it so it's a better situation for you and your 5-year plan. We're just not putting them in a place. We're trying to get them 5-year, you know, financial goals under wraps.
Exactly. So, well, and then also too, to help with the turnaround time, y'all have a digital app where people can actually upload their documents to the app. So it makes it even more streamlined for the consumer.
Yeah, it's very user friendly. You know, depending on the person, we can either send a text message or we can send it through email. They download all their documents there. The realtor can even see where they are on the process to download the documents and where they are filling out the application. Just very user friendly. We try to make it easy for the client.
Well,
So
yeah. Well,
that's our biggest goal.
Well, and so, and I'm assuming the app works on all phones and computers and all that. So
Yep.
that's pretty
No
easy.
limitations so far.
So far, well, that's good. Well, it sounds like you don't have very many limitations even on properties or people. So that's even better. Well, good deal. Well, I really appreciate y'all coming, and we'll have the graph that you hopefully you'll be able to see a graph just kind of comparing y'all's company to competitors, so that way people can see it firsthand. So what all y'all can do, and I'm looking forward to working with y'all. So thank you. And thank you for watching.